NEMT insurance costs up to $22,000 per vehicle are crushing operators, but there are proven ways to reduce them. If you're running a 5-vehicle fleet, you could be looking at a $110,000 insurance bill this year. That's before you pay a single driver or put gas in a tank. For most operators, insurance has become the biggest line item on the P&L, bigger than payroll, bigger than vehicle payments. And it's not getting better. Here's what we're going to cover. 5 specific ways NEMT operators are cutting their insurance costs without cutting their coverage. First, readjust, bundle your commercial auto with your general liability and garage keepers. Most operators buy these separately because that's how they started, but insurance companies offer significant discounts when you consolidate policies. We're talking 10 to 15% savings just for putting everything under one carrier. One operator in Georgia dropped from $18,000 per vehicle to $15,500 just by bundling. That's $2,500 per vehicle for making one phone call. Second, invest in formal driver training programs. Insurance companies love this because trained drivers cost them less money. Look for National Safety Council defensive driving courses or Smith System training. The upfront cost is maybe $300 per driver, but you'll see premium reductions of 5 to 8%. That's real money when you're insuring a fleet. Plus, trained drivers file fewer claims, which keeps your experience modifier low long-term. Third, install telematics and driver monitoring systems. Hard braking, rapid acceleration, speeding, insurance companies track all of this now. Systems like one-step GPS don't just help with dispatch and billing. They give you driver behavior data that insurers use to calculate risk. Good scores mean lower premiums. One 40-vehicle fleet in Texas saw a 12% reduction in their renewal just by installing monitoring and sharing the data with their carrier. Fourth, document everything for your preventive maintenance program. Insurance companies want to see oil changes every 3,000 miles, brake inspections, tire rotations, all logged and dated. This isn't just about compliance. It's about proving to your insurer that your vehicles are maintained and less likely to have mechanical failures that cause accidents. Operators with documented maintenance programs consistently get better rates than those who can't prove their upkeep. Fifth, be ruthless about driver screening and ongoing MVR monitoring. One DUI or reckless driving charge on your roster can spike your entire fleet premium. Pull motor vehicle records every 6 months, not just at hiring. Set up automatic notifications for violations. Yes, this means sometimes losing drivers you've invested in training. But one bad driver can cost you thousands across your entire fleet renewal. Here's a real example. A 12-vehicle operation in North Carolina was paying $21,000 per vehicle annually. They bundled policies, installed telematics, documented their maintenance program, and tightened their driver screening. Their renewal came back at $16,000 per vehicle. That's $60,000 in annual savings for operational changes that took 3 months to implement. Insurance costs are brutal right now, but they're not completely out of your control. Small changes in how you operate and document your business can add up to real savings. If you want more specific strategies for cutting NEMT operating costs, subscribe. We break down the numbers every operator needs to know.